Imagine this. You open your stock app one morning and see your favorite stock is down 15%. Your heart starts pounding. You feel that urge, that itch to sell everything before it gets worse. But then a week later, the market bounces back and you realize you sold at the bottom. Sound familiar? Welcome to the world of emotional investing. And in 2025, when the market moves faster, news spreads quicker, and AI-driven trading dominates, avoiding emotional decisions has become harder, but also more important than ever. So today, let's talk about how you can control your emotions, stay rational, and invest like a pro, not a panic-driven amateur. Emotional investing isn't new. Humans have always been emotional creatures. We fear loss, we crave reward, and we hate uncertainty. The problem is the stock market feeds on those exact emotions. Every big crash, every rally, every headline, it's designed to make you feel something. And when you feel something, you act, usually in the worst possible way. When prices drop, fear takes over. When prices rise, greed takes over. And when everyone around you is making money, you feel the fear of missing out, FOMO. That's how people buy high and sell low. That's how they lose money, not because they picked bad stocks, but because they couldn't control their own minds. In 2025, emotional investing has taken a new shape. Social media amplifies panic in seconds. AI algorithms predict and manipulate human reactions. And 24/7 news keeps investors on edge. One tweet can move billions of dollars. One rumor can cause a sell-off. And if you don't have a strategy, your emotions will destroy your returns faster than any bad investment ever could. So let's break down the practical ways to protect yourself from emotional investing and how the smartest investors in 2025 keep their cool no matter what happens. Step 1, understand your emotional triggers. You need to know what sets you off. Is it watching your portfolio drop 5% in a day? Is it seeing your friend make big gains on cryptocurrency? Or is it reading headlines about the next market crash? Everyone has different triggers. The key is to identify them because you can't control what you don't understand. The next time you feel anxious about your investments, pause and ask yourself, what exactly is making me feel this way? Once you pinpoint the cause, it is easier to respond rationally instead of reacting emotionally. Remember, awareness is your first line of defense. Step 2, have a plan before emotions hit. Smart investors don't make decisions in the heat of the moment. They make them when their mind is calm, and they stick to them when things get rough. This means having an investment plan that defines your goals, risk tolerance, and time horizon. You should know exactly what you will do if the market drops 20% or if your stock doubles overnight. When you know your plan, emotions have no power. For example, if your plan says you'll invest $500 every month no matter what, you don't care if prices are high or low. You just keep going. That is discipline. That's how real wealth is built. Step 3, use automation to remove emotions. In 2025, this is easier than ever. You can automate almost everything from saving and investing to rebalancing your portfolio. Automation takes your feelings out of the equation. Because let's be honest, when it's up to you, you'll hesitate, overthink, and sometimes do the exact opposite of what's right. But when your system invests automatically every month, no matter what the market does, you build wealth quietly in the background. That's the power of consistency over emotion. Set it. Forget it. Let time do the heavy lifting. Step 4, stop checking your portfolio every day. Seriously, this might be the simplest and most powerful habit to stop emotional investing. Because every time you check your portfolio, you invite fear and greed to take control. Watching daily market moves is like checking your weight every hour. It's meaningless and it will just stress you out. Markets move up and down constantly, that's normal. But over time, the trend for good investments is upward. So instead of checking daily, check monthly or even quarterly. You will think more long-term, make fewer emotional decisions, and probably sleep better too. Step 5, separate investing from entertainment. A big problem in 2025 is that investing has become content. People watch influencers, TikToks, and YouTube channels hyping the next 10 times stock or AI coin. It feels exciting. It feels like you are missing out if you do not act now. But that's not investing. That's gambling dressed in financial language. Real investing is boring. It's consistent, disciplined, and slow. It's not about excitement, it's about outcomes. So if you ever feel too excited about an investment, that is a red flag. Take a step back. Ask yourself, am I making this decision because it makes sense financially or because I'm emotionally charged? If it is the latter, pause. Walk away. Let logic return before you invest a single dollar. Step 6, accept that losses are part of the game. Even the best investors lose money sometimes. Warren Buffett has lost billions in market downturns. But he never panicked because he understands that losses are temporary. Growth is long-term. The market isn't supposed to move up in a straight line. It rises, falls, corrects, and rises again. If you can't handle seeing red numbers on your screen, you'll never experience the big green gains that come later. The trick is simple. Zoom out. Look at a long-term chart of the stock market. All those short-term dips, they look tiny. But if you stayed invested, you would still come out far ahead. So next time your portfolio drops, don't panic. Remind yourself, this too shall pass. Step 7, learn to love boredom. Yes, boredom. Because real investing success comes from doing nothing most of the time. The people who constantly buy, sell, and chase the next trend rarely build wealth. But the ones who stay calm, stay invested, and let compounding do the work, they win. The stock market rewards patience, not panic. Every emotional decision you avoid today is another step toward long-term freedom. Step 8, surround yourself with rational people. Your environment shapes your behavior more than you think. If your friends are always hyped about quick profits, you will feel pressure to chase them. If your social feed is full of get-rich-fast posts, you will start feeling behind. Instead, follow investors who talk about discipline, not drama. Read long-term thinkers. Listen to people who talk about process, not predictions. Because the calmer your environment, the calmer your mind will be. Now, let's talk about 2025 specifically, because this year's market is unlike any before. AI-driven trading, algorithmic volatility, and global uncertainty make emotional investing even more dangerous. AI doesn't feel fear. It doesn't panic. It trades based on data, not emotion. And that's exactly what you need to learn from it. If you want to win in this new era, you need to invest like an algorithm, disciplined, rule-based, and emotionless. That means following your system no matter what the news says. Because remember, news outlets don't make money when you stay calm. They make money when you click, panic, and act. Don't give them that power. Let's end with the biggest truth of all. Emotional investing isn't a money problem, it's a mindset problem. It's about managing yourself more than managing your portfolio. The market doesn't decide your returns, your behavior does. If you can stay calm when everyone else is losing their minds, you're already ahead of 90% of investors. So in 2025, make this your mantra. Discipline over drama, logic over emotion, patience over panic. That's how you survive and thrive in the modern market. And if you want to take your investing mindset to the next level, hit that like button, share this video with a friend who panics too much about money, and subscribe for more real-world financial wisdom. Because remember, it's not the smartest investor who wins, it's the calmest.